So now it is time to jump into our conversation today about these innovative funding solutions. And we've got three amazing experts to guide us through our conversation. First, I'm excited to introduce John Bay. John joined PayPal to become the Director for Global Merchant Lending 2 years ago after being an executive with Bank of America. With nearly 20 years of financial services experience focused on small businesses, providing innovative solutions across all financial products, think deposits, credit cards, lines of credit, all of that. He strives to help small businesses achieve their goals. Hi, John. So great to have you. And last but certainly not least, we have Chad Patterson. Chad is a business executive and strategic visionary with over 15 years of experience in finance, sales, and marketing. Chad has successfully founded 3 ventures and is passionate about helping small business owners and entrepreneurs scale their ventures. Hi, Chad.
Hello, Brittany. Hello, everyone out there as well.
Wonderful. And Chad, I'm going to start with you. What are some examples of innovative funding options for our small business owners?
So I think before I'll dive into that, I think let's just kind of break down the difference between like traditional versus non-traditional. I'm sure some of you folks already are aware of this, but when you think about traditional funding, banks, right, where John worked at Capital One, credit unions, or any like government-backed programs, right, like SBA is kind of considered that more traditional approach. When you're thinking about non-traditional, and I think that has grown over the last probably 10 years or so, but online lending, right? So a lot of like fintech companies, right? Venture capital, right? Angel investors. So there's a lot of those different syndicates, crowdfunding platforms. I mean, I think you all know Kickstarter, I think GoFundMe, like those are really big platforms that folks are using to raise capital. CDFI, so that's like community development financial institutions. They're actually incentivized to lend to like folks within the community. So always be cognizant of that. I think you can leverage that and build relationships with some of those folks within your community. And then like peer-to-peer lending, right? There's kind of a variety of different platforms that enable that as well. So those are just the difference between like traditional versus non-traditional. Now, like when we think about kind of these particular platforms, right? Let's say the crowdfunding platform, Kickstarter, Indigo, like that's really there to allow entrepreneurs to raise capital directly from like any potential customers or supporters. Then when you're thinking about like revenue-based financing, that's kind of where investors are able to provide capital in exchange for like a percentage of your business, right? Or there's companies like Clearbank or like Path. They kind of really specialize in this particular model. And then there's like the peer-to-peer, like that lending platform. So that's also kind of, as I alluded to, emerged as a game changer, really, right? So there's websites like Prosper or Lending Club really connects businesses directly with individual investors, and oftentimes more competitive kind of rates too, and less kind of attachment on top of that. And then angel investors like networks or micro venture capital syndicates, those are also some elements to always kind of be cognizant of. Those are traditionally for like tech companies, like big healthcare, tech, fintech companies. They're kind of really big on venture capitalists having the right central infrastructure to support their business and things of that sort. So hopefully, Brittany, that answered your question.
Yeah, absolutely. I think what this really highlights is there are so many options, and kind of like you said, Chad, like this landscape has really expanded over the last 10 years. So there are more and more options for entrepreneurs today. With all of these new things, I was wondering, what are some common misconceptions that small business owners have about these alternative funding methods, and like how can they avoid those?
I'd say one of the common misconceptions that small businesses have about their financial readiness is the idea that they need to have a robust background of prior credit history established through traditional institutions. And we know that isn't always the case, especially for more emerging businesses just starting out, or those that are trying to make a side hustle turn into more of a main source of their income. Some alternative lenders are able to look at other indicators or trends that help understand their financial capacity and to help make understand those businesses to help make the lending decisions beyond necessarily just your traditional credit bureaus and financial statements. And that can be very critical for businesses in a growth stage. An example would be for PayPal, we have one product, our working capital product. It is a fully automated application and decisioning process. You would not have to talk to a representative at all. You could if you wanted to, but in terms of the need to actually engage with a person, it is very streamlined. So super easy. Small business owners have very limited time, so it was really built and designed for that. But I do want to reiterate that even though alternative lending, just like that have been highlighted here, that even though there's additional sources of information and means to get to an approval, it's still critical for your business that you have basically the core items, which is positive cash flow, an established revenue source. Even for a startup, you still need to show, you've got some established revenue streams. And of course, good credit, whether that's your personal or business or both, and around your payment processing performance, right? So how you're collecting that revenue, that helps establish a trend and information that different lenders can leverage in making a decision.
John, that's such a good point, that even though these alternate funding solutions might look a little different, there are some key elements that you still want to make sure you have access and awareness of, and are able to leverage those when you are looking for funding. Thank you so much, Dr. Penny Mickey. Thank you so much, John Bay from PayPal. Thank you to Chad. And we hope you all have a little bit more information, or at least a next resource for you to go to. Please don't forget about all of the resources we offer you for free